Good morning all, it's Wednesday, here we go. Important day today. I've got some really interesting trades to show you, so get ready to pay attention. Quick recap from yesterday, I was talking about the pound pushing higher, break above this trend line for cable, the pound versus the dollar. So we did push up, this is the 4-hour chart. We got to 136.20, so the breakout's working. If we have a retracement, which is always possible to retest the break point, the trend line is around 136.03. And then we've got the 23.6% fib at 135.92. So that 10 pip range should be a really good support level for today. If you're trading cable, just be careful because obviously we have got the Fed rate decision tomorrow, which could move the markets. I'm guessing we won't do an awful lot in dollar pairs today because I think people are probably positioned the way they want to be. Maybe some flattening out in the market before the rate decision. GBP versus the Aussie. I was looking at this pattern here, this channel, and I said we were looking like we were bouncing off it. Well, we are bouncing off it. It's a bit of a slow run. We are seeing deep pullbacks, but so far we're holding above the trend line. So it's quite bullish for the pound against the Aussie as well. We were looking at the pound versus the yen, and I was actually quite negative on this yesterday because we tested this trend line up here around 200.68. You can see we made a high exactly at the trend line. We've reversed quite significantly, and I think there could be some further downside for the pound against the yen. So I think there were decent calls on the pound yesterday. Hope they have helped you. What do I want to look at today? This is mega important, and it's another example of why you must look at longer term charts. Okay, this is the Aussie versus the US, and it's had a really good run up lately, which doesn't look like much on the monthly chart, but it has had a very good run up. But you have to look at your longer term charts. If you are looking at the daily chart, which is quite a long term chart for some people, a lot of people are looking at the 5-minute, 10-minute, 30-minute, even 1 hour, maybe even 4 hour. But I don't think that many people even look at the daily chart as day traders. If you're looking at the daily chart, you're thinking, right, strong bull trend, broken out of consolidation pattern, off we go. We're going to the moon, sky's the limit. I need to make sure I'm long the Aussie. Then you put in a trend line here and you realize, oh, okay, there could be some resistance, but not really a major problem. Then you go to the monthly chart and you see that we really have a major resistance level. So let me try and break this down for you. Going all the way back to 2011, okay, that's 14 years. This trend line goes back 14 years. Look at it. This trend line, the blue line, there you go. I'm tracking it all the way down through the peaks. The last peak it touched was September 24. So that was bang on a year ago that we made that peak. If I kind of zoom in, you can see we have just broken a little bit above the trend line by about 40 pips. But 40 pips on a monthly chart for a trend line that's going back 14 years is nothing, as you can understand. It's well within a very small margin of error. So I'm not going to take it as a break yet. If we closed the week above the trend line, then I might consider it. If we closed September above the trend line, I would probably have to take it as a bullish breakout, and I would be looking to get long the Aussie versus the US. But right now, I'm not going to get excited about a breakout, and I'm going to consider that we are still testing the resistance. Okay, let's go to the weekly chart. You can see on the weekly chart, there is the trend line. On the weekly chart, we've barely broken it. We've got 1 week candle holding above the trend line. So I really think that that's well within the margin of error. Look, here you can see we blipped above the trend line. And we are testing the red 200-week moving average for the Aussie versus the US. It's another significant level coupled with that 14-year trend line. Plus, we have a significant trend line. Doesn't look that significant on the weekly chart, but this trend line does go back to March. What's that, 6 months or something? So it's that, even that is a significant trend line, and it's been tested so many times. Week after week, this trend line has been tested. So it's a very well proven trend line. There is just so much resistance going on up here, and we even have a fib level at 67.20. Okay, that is about 50 pips above where we are, but again, 50 pips on the grand scale of things, when you're looking at a monthly chart, when you're looking at a weekly chart, it really is not much at all. We could clip that fib level and reverse easily. The second set of fibs goes from the peak of this year down to the low, and the 38.2% fib on that, let me just zoom in on the daily chart. I just wanted to give you that perspective to show you where I've taken the second set of fibs. So there's the fib line, goes all the way out here on this chart. 67.19. Okay, so as you can see from the daily chart, we're not that far away. You can see we are definitely hitting some major resistance right now around the 67.00 area. I will be watching for candles on the daily chart, candles on the 4-hour chart to get some sort of confirmation to know if the level is holding. But at least I need to let you know that if you are long, and if you're thinking about jumping into a long position, trend following in the Aussie versus the US, you might be jumping in right at the very peak of this move. Let us just have a look at the 4-hour chart, see if there is any indication of a reversal already. No, not really. Not seeing any candles that would suggest that the market is going to collapse just yet. I think it's unlikely to turn around and go down as sharply. I don't think this is going to be an upside down V shape. I think I've probably said all I can say on it. It's something we're going to have to watch. I'll be keeping an eye on it for you. Talking of bull trends, of course, gold's been in a really strong bull trend. We've ridden this trend the whole way, really. I'm pretty pleased with what we've done with this. Looks like we're going to have a small downside correction. Looks like we need it. We've had a good run up this week. We may have already seen the high for this week. I've got a feeling we have. It's a feeling. There's nothing really technically to suggest that, but going on my gut feeling, after we've made a new all-time high at 37.03, I think we need a very small pullback to this trend line here. That's around, let me get my crosshairs, around 36.50, 36.60, 36.50. This area here looks like a really good support level, and I think the market is going to be drawn towards this over the next couple of days. If I'm right, it should be a really good support level. The white line is the 50-hour moving average, so that's going to lend some extra support to these two trend lines and the fib level, and of course this congestion area anyway. So the price action, the trend lines, the fib level, the moving average, they all indicate that this should be a good support level. And I do just think we need to turn around, ease these overbought conditions on the 4-hour chart, come down and test this level. We'll see if I'm right. I wouldn't be getting into a short position on that basis. It's too risky. There's nothing specific that's telling me the market's going to have a small downside correction. I just think it's about time. I think it's a little bit overdue. And also when I flip to the 1-hour chart, I've got the blue line just coming in at that top trend line there around 36.57. That's the blue line is the 100-hour moving average on the hourly chart. And I've got the red 200-hour moving average also moving up towards that fib level. So by the time we get there, maybe around here, we could be seeing good support from the moving averages as well as the trend lines and the fib levels and the price action and everything else. Looks like a really good support level in gold. I think you've got my point. The silver bulls have not been having such a good time. They've been struggling with this bull trend. Yes, we've been going up, but it's been difficult to hold a long position. Yesterday on the 4-hour chart, we got this very large bearish engulfing candle signaling that the silver market would see a correction to the downside. And indeed, we've seen that big red candle there. I think we've got further to go, but we do have a good support level around the 41.50 area. I should probably be adding some trend lines to this chart. Let me have a look. I think that trend line there would be quite appropriate. Yep. That looks good to me. Just have another look. Yeah, I think that's probably enough. Okay, so you can see if we continue lower, there is some trend line support. We've got the fib support around 41.50, trend line support around 41.35, I'm going to call it. We've got obvious swing highs here everywhere from 41.35 up to 41.60. So we've got price action. We've got a 50-period moving average on the 4-hour chart there as well. We've got a trend line going back to the 2nd of September, about 2 weeks old. We've got the 23.6% fib at 41.50. You can see that mid 41 area should be a good support level. And it's kind of characteristic of the trend that we've seen where the market has a good run up, but quite a deep pullback run up, quite a deep pullback. So this might be a run up, quite a deep pullback to the previous highs, and then we take off again. Let me see, do I need to look at the 1 hour chart for this? See if there's anything else important. I'm looking for moving averages really to support my theory that that's a good support level. We've broken the 100-hour moving average. That could trigger further moves to the downside to my support level. And we've got the red 200-hour moving average also lending some good support there. So yeah, really good support level around 41.50, 41.35 area in silver. That's probably enough for you to digest today. I think there's quite a lot going on there. Good luck if you're trading today. Please do join me tomorrow.